All right, folks, welcome back. This is our midweek review for the ICT Mentorship. I apologize. I've been dealing with a pre-op procedure as I'll be having surgery next Tuesday morning. As a warning, I obviously will not be doing any video next Tuesday, and I want to be able to do it on Wednesday, but I'm hoping that you guys will give me the flexibility to not put one up if I can't. Okay, so we're going to be basically playing it by ear, and we'll see what we get. But we have the dollar index. Here is the daily chart, and as I mentioned on Monday, we would likely trade down into this. If I'm not mistaken, I gave you the 60-40 split. 60% likely to trade down to here, and if it did go above here, then it would go there. But I was basically trying to lean the heaviness on the bear side. You can see we did get that on Tuesday's trading. Traded down into the order block, going down into it one more time. I think that watching the mean threshold here, if we lose mean threshold there, then we have this small little gap right there with an order block. So in here, if we lose the mean threshold, focus right here, okay? If we go through this, then focus over there. One step at a time. I'm not trying to sell the idea that this is even likely right now, because it needs to get through this first. If we rally above Tuesday's high and close, then we'll be looking for another pass inside this area here, and we'll obviously judge it when we get to that. 1 hour chart, dollar index, bearish order block, these 1, 2, 3, 4 consecutive candles, imbalance, trades up into here multiple times, sells off, small little fair value gap in here, it's traded up into that, so it may remain heavy and trade below this low in here. These lows, I mentioned that on Monday we would likely trade down there and attack the liquidity in here, and then this low here, and this is that daily fair value gap that I said they would likely draw down into, and we saw it trade there rather beautifully, really, back into the bearish order block. So from here to here, nice move. From here to here, nice move. From here down into another run below here, and then the levels I was giving you just a moment ago on the daily chart, those are what we're looking for as a downside draw on liquidity. 15-minute time frame, nothing too exciting in here, just the 1 hour chart, bearish order block, 1, 2, 3 passes there. We break down, small little gap in here, trades up into that institutional order flow entry drill, sells off, and just digs in deeper into this swing low here. So again, looks bearish still for dollar, and it means upside potential for euro and cable. Euro dollar daily chart, again, we trade down into bullish order block, right away from that. I said this on Friday, obviously you can go back and look at that. We hit this, and the draw on liquidity up to here was hit yesterday, and we had an inside day here. So today's trading, we've already started the new candle for Thursday's trading, but this is Wednesday's candle. Previous day high on Tuesday, and previous day's low here on Tuesday. The next day or Wednesday's trading was inside of that range, so the lower high and the higher low was formed in here. I would like to see a sudden rush on the upside for euro. Focus in on mean threshold of this last up close candle. Obviously the open is sensitive as well, but if we get through that, focus midpoint there. If we get a lot of momentum right in here, we have buy side, and we have a small little imbalance right in here. Not too overzealous about this at the moment, but for now I'm would rather see a expansion on the upside, a large candle, and weakness on the dollar would obviously provide the means for that to occur. Hourly chart, euro dollar. Nice reaction there. We already talked about that. And we ran away from these down closed candles. So displacement, trades back down in, order block, optimal, trade entry. And this looks like we're sitting right on top of a breaker that's bullish. Here's a low, high, lower low, last two up closed candles. That's one order block extending out in time. We're sitting on top of the bullish breaker now. I would expect continuation on the upside based on the market structure that's being shown here. Euro dollar 15-minute time frame. Again, you can see how we have nice accumulation in here. Rallies up, order block here, builds up momentum, takes out short-term high, bullish breaker. That's where we're trading out here. Buy side above here is what's next. Draw on liquidity. Not many pips there, but obviously what we annotated on the hourly chart would be possible upside draws on liquidity. Pound dollar, daily chart. We traded up into this area here, as I mentioned. 1, 2, and then right on through it on Tuesday's trading. Traded back down into the down closed candle here. And remember, down closed candles, when it's bullish, that is like a short-term pause and then upside expansion. Add to it also, we have the high and the low of this candle, and the next down closed candle is here with a inside day. So inside day, while bullish, large range day, we open here, trade down into the order block there, and rally back up. So we're looking for the buy side liquidity here as a next upside draw, and the rejection block on this candle here. I don't want to have that because it's too many lines, but just on your chart, rejection block, and then the buy side liquidity pull at the old high here. Here's that bullish order block on the daily chart. Trade down into that beautifully. Buy side unbalance, sell side inefficiency, and order block on the hourly chart. Big beefy down closed candle. Not these, not this. Why? Because this high and this low on its close, that entire range, all these order blocks, all these down closed candles in here are all inside of this one. So this is the parent order block. All of these are subordinate to this one. And it's not needed to be traded to any of these. This is the one that's going to matter the most. We have the change in the state of delivery there. Rallies up, hits it one more time, rallies aggressive. Drifts back down in, inside the fair value gap, and order block, snaps higher. Low resistance liquidity run signature. Bam, hammered it. Now we could drop down into this imbalance in here and pick up orders around 138.05, 138 big figure. Could drop down as low as 37.95, and then look for another attempt at price spooling to the upside as I outlined on the daily chart. Pound dollar 15-minute time frame, nothing real exciting outside of what I already mentioned on the hour chart. Yeah, nothing in here that is worth noting outside of what I've just mentioned on 60 minutes. Which brings us to our homework assignment. Didn't think you were getting homework this week? Homework assignment for Thursday review is the Australian dollar versus the Japanese yen, or Aussie yen. This is your case study. You want to mark up why this low to the present high. Why was this a likely scenario for upside? And what were all the reasons and catalysts that set up this whole event here? Okay, so we'll break that down tomorrow. Take the time to go through it. Start working on it tonight if you still have time. That way you get a head start on it. Don't kind of rush through it. And I'll give you the review after I do the normal review on Thursday's commentary. Until I talk to you then, be safe.